Okay. We'll do a when you're ready. We'll just do a mic check with him. Okay. Was he able to hear me or no? Okay. Okay. Yeah, he said yeah. Okay. Let me find that. One thing I did find interesting about GameStop was they pulled that move where they did a pre-release on their earnings, um, which was cool. They disclosed they had like what it followed the sale of 75 million shares. I don't know if you saw that because let me see if I can pull it up here on. Let me go to SEC.gov. Try to pull that. I think was that on the 8K. Oh boy, let me find it. Financial statements and exhibits should have been released on the 7th. Blah blah blah. Let's see, open market sale agreement between Jeffries. Twitch is weird. Oh no. Okay. Twitch is a terrible platform. It really is. It's navigating this thing. Um,
Okay, can you hear
well,
me? Can you hear me now? I think I'm on now. I think I'm on
I'm just
now.
having issues sharing this page, the SEC filing. It was an 8K because usually no one cares about an 8K until because it's always the 10Q and the 10K that everybody cares about. But in this particular instance, the financial statements.
Yeah. Now the sound is doubling. Okay.
Oh boy, how do I share this?
Maybe I need to. Okay, so I think I got it. I think I have it. Let me
Okay, so can you see this?
I'll give you 1 second, brother. Trying to figure this out. Yeah, I can see it.
Okay.
Yeah, I can see it. I can see it now. Give me 1 second.
Is it-
Give me 1 second, Zyder. I seriously need to fix this somehow, man. But go ahead. Go ahead, Tinfoil.
Exhibit 1.1 description: open market sale agreement dated May 17, 2024, between GameStop and Jeffries. Can you see the open market sale agreement?
Yeah, I can see it.
Okay.
I'm sharing this too on the stream as well.
I hate Chrome. Usually I just pull the stuff and translate it to a spreadsheet. Um, yeah, we're having a hard time tonight. I mean, this 8K really, explains a lot of stuff. Like, and one thing I noticed they had in bold was debt repayment. Okay. All right. So no, I found the right. I was just looking at the verbiage in terms of agreements on the other one there, but this came out. So the 8K form, and let's see here. On 7 June, a GameStop core filed a prospectus supplement with the securities with the SEC in a connection with the company's at market offering program for the offer and sell from time to time through Jeffries LLC of up to 75 million shares of the company's Class A common stock per value. So you can see all this, right? Okay. The company has sold an aggregate of 45 million shares of its common stock for the aggregate gross proceeds of approximately 933.4 million pursuant to the sales agreement. So it wasn't a billion, but it's close. I mean, you could round it if you like to round up. um, but I think that was actually quite important. Um, if you have questions about game, that was actually kind of a smart move. Again, I think it's more about the management than it is the actual valuation of the company because as far as the revenue that they're producing, and you want to factor that into the market cap because it's one thing to look at the share price and multiply that times the shares outstanding and get the market cap, but you also have to take into account the enterprise value, accounts receivable, and last thing I checked, and I'm not going to go through uh, all of these filings tonight. I've already done it last week, and I'm tired out. But if you actually look at the accounts receivable, there's a lot of stuff that they're not getting paid from that they're not receiving money for. Sony cut an agreement with them a long time ago. So I mean, the thing is, I want to look for if you really want to talk about game. Hold on. They did get a cash infusion, yes. Well, see, I agree that their boat is still sinking. Yeah, 100%. Um, you know, that's I guess just cutting to the chase though, where I'm at with it. I mean, this thing can meme up that Ryan Cohen can say things. If he mentions Bitcoin and he does like what Similar Scientific did with the 40 million purchase of Bitcoin and like MicroStrategy, and then how they're getting into that space because the NFTs, I mean, they're garbage. They got into that industry at the top. And like, what are they doing? Just selling Pokemon cards now? And they were trying to back them by NFTs. I mean, come on. But the the thing is, it's just a meme pump. It's impressive what Roaring Kitty has done. Uh, I mean, as far as him and what he does, I mean, if he exercises the calls or tries to write them, when did they expire? Like June 28th or something? Yeah. Okay. Yeah. I mean, wait. Yeah. I mean, the smart thing he would do is to exercise them at least. Um, that's the only thing. What I took from the stream was the only thing he said is, "We don't know. We'll see how it goes." Quote. And Ryan Cohen. So, if anything, the way I saw it was he's just gonna. He's telling all his watchers to believe in Ryan Cohen, and so I guess the spotlight's on Ryan Cohen to see what he says. I could see it like Ryan Cohen says something, um, and honestly, I've done a lot of I've done a lot of networking with a lot of people across the platforms, to include Martin Shkreli, and everybody thinks that the values with Bitcoin and all the stuff that they're doing in expansion there. So I and they're going to buy that. So Ryan Cohen needs to mention that, and if not, I don't know where this thing is going to go. I'm right there with Zider as far as the debt. 100%. They got the cash infusion. The only thing they were able to do with it is deal with debt, which they did, and you can see that. You know, but if you look at this thing in the next 5 years, that's the only thing they have left. I mean, come on, when the PS5 and the Xbox is they move to the sixth generation and everybody just buys online. I mean, even Steam has an edge over these guys. Like, what have they done? And I've looked at their revenue and their sales, and it's not good. Um, so, I mean, from a valuation perspective, this thing, GameStop it's not worth it. But as far as like options gamma and the things that are said and the hype that gets in there, uh, I yeah, it could do some wonderful things. But the problem is, like even what I did Friday, because we're on our main accounts, we're messing with Nvidia, and then like on one of my accounts, we hit Nvidia at the 13s, pre-split, got in literally for 30 minutes, took the contracts up for $2. Uh, and so obviously per contract, the difference in there, $2, so that's $200 per contract. And I had 10 contracts, so I was like, all right, well, profit for today.
Order submitted.
Profit for the day was sitting at roughly, like 2K. I was like, all right, cool. Well, I still have some cash. I have 10K sitting around, and I don't use margin on these smaller accounts. So I was like, well, from that layer, I can take $1,000 and try to play game. That was so dumb because the halts. There's no way. You know, at, and I, yeah. Well, I had to pull up. I was monitoring the Nasdaq, so they always put out the alerts on when it's halted, and um, I think it's common knowledge that it was like a 5 minute time period, between the halts. But that made me so angry. I was up 100% on the puts. I engaged on $25 puts, and I tried to get them. And when they would open the halt, here's the other issue with that: the premiums, the way the market makers would price the premiums. Did you notice that they would spike them and devalue them? Um, so pre-halt, the 25 puts were, yeah, they were up 100%. I can't remember exactly what they were worth. It was actually a pretty good, pretty cheap. I think it was like 50 cents, and they opened up at like $1.50 or two. And that's my bread and butter. I always like to play with stuff that's like anywhere from $1. So, but then after the halt, it just they opened them back up at like 50 cents. And I'm like, what's going on? I can't. They're like, wow. And I try to sell the stuff, and it just it goes to zero. And I ended up losing uh, $200 off 1,000 that I put in on that. And I was like, all right, it was up. It was up. Great. And then it just the halts kept screwing that up. So I wouldn't do anything stupid. And when I was checking in with Wall Street Bets, I was in their chat a little bit. I'm an enormous Pepe over there. Used to be tinfoil trader there, but I changed my name. And these cats were buying, strikes at 128. Somebody threw like $19,000, 19 grand on $100 strike, expiring on the 7th. I mean, these people are insane. Unbelievable. Yeah, that's what they're doing. And I'm like, dude, at least buy shares. But yeah, I know the market maker's happy, and they burned it. They burned the heck out of GameStop at the end. I mean, both ways. If you're out of the money, you're not making any money. Even the in the money is worthless. I mean, I always trade out of the money anyway on options. I always do it, $3 to $5. In the money is ridiculous. It's slower. It doesn't move, and you're spending a lot more expensive for momentum. Options. The whole goal there is to pull liquidity out. Like Zider said, you want to be able to scalp it. That's what we were doing on Tesla and Nvidia for the past couple of weeks. So, like the Tesla news, that stuff you can expect. Like the price package that's going to come in, it's due the 13th of June. And you can get in off the moves and scalp $50 to $1 off each. You'll see the call volume come in, and you start to see the share buying and stuff, and you can scalp that. But then if you hang around in it too long, after 7 minutes, it's back to break even or something. But I mean, I'm not there for that. I'm just there to sell premium, get out. But GameStop, it's hard to do that. I mean, this thing could squeeze. It could do something absolutely dumb. Yeah, actually, based off the market cap, and then some of the new, at least on the Gamma that I've been seeing. The market makers are pricing in the premiums. We're looking at like 60. I think it could break 60. 60 is a solid number. It did that, pre-market once. No, well, this past week it hit the high of 60 overnight. Yeah. And then they took it right down on open, like to the 39s or something. And if it breaks 60, it can go to like 90, like 60, 75 92. Is based on what we're seeing there. And then I mean these clowns that have stuff that's all the way up there from like 120. Yeah, I saw that. It was like 30,000 volume on 128 call, which is crazy. I mean, who knows? But I mean, is this thing going to stick around for value? No. And you're probably going to lose more money trying to chase it. So I wouldn't throw more than 5% of a liquid cash balance on that, you know. And then you got crappy old AMC. One thing I noticed on the stream too was somebody was trying to get him to talk about movies. He was like, "Hey, do you watch any movie?" I know what that was. They're trying to get him to pump AMC. Yeah, I even bought some AMC calls just because I know this is all crap and garbage. I know there's no value in it, but uh, you know, because you look at AMC, see GameStop, like Cedar said, they were actually able to deal with their debt. If you look at AMC, I mean, my gosh, a smooth brain would realize this company is not going to make money. Um, it's actually worse off than Hertz back during COVID, because Hertz had inventory to sell, and they did. And then their shareholders, their meme stalkers, bailed them out of bankruptcy. At AMC, and I mean, my God, the way they've handled that's another one I wouldn't even touch. And I get it, it's like the poor man's GameStop, but yeah, I mean that's my thoughts on GameStop and this whole meme stuff. And I wouldn't. I think it can really hurt you if you get distracted on it. Like this can take away probably months worth of profits with just stupidity. I would treat it like a lottery ticket, that like you've parted way with that with less than 5% of your account, and you really want to be a part of the saga, for the books. This isn't the first time. Back in 2021 when this happened, Roaring Kitty has all the clout and they made a movie about him and stuff, but it was Wall Street Bets. That it was us. It was Wall Street Bets, and we were doing stuff like Palantir and squeezing the hell out of Andrew Left. We made him cry over that. He was angry about it. And yeah, because we got in at $6, and it went all the way up to 18 and 20, and he released that short sale report. And then that's when everybody started getting into the meme stocks initially. And that guy's an idiot too. I mean, come on. I don't know if you've seen what he's been doing, but he like doubled down on the short again. It may pay off for him, but because I mean that's what got me into 2021 was like when actually interesting people with money that worked in firms were like, all right, who are these clowns? Like who are you? And I started getting weird messages because back then they had a Discord that was quite. The Discord now isn't really authentic to Wall Street. Like Wall Street Bets is dead, the real one. After Gabe Plotkin went on CNBC and said that it was anti-Semitic and all that stuff. I mean, and I'm not kidding you. Back then, they literally shut down the Reddit board and the Discord connected to it for hate speech. We call it the nuke. And then everybody was lost. And then, some of these new cats came in and tried to monetize everything. And, then you had a lot of stupid money coming in that just, oh my gosh, I want to be like them. Let me join the Reddit. And they know nothing about what they're doing. They couldn't even, calculate price to earnings ratio on a stock, and but then there's some of the old timers like us around, and then that's when I met Dave. He worked for Light Tower, and some guys up at Morgan Stanley, and they're like, all right, well, and it was a really weird message. He was like, let me show you something. They're like, who are you? And he said, well, give me a call at this number. And I called him, and we talked, and he's like, well, if you've been able to perform like this, if you want to go and take a few tests, you can put your hand on giving a shot at, some of our accounts. And I worked with him. I mean, he was a good guy, like not on people, not all people on Wall Street are bad. And that's how I, ran into people like Martin and some other interesting people. There's a lot of money that can be made if you do it right in options contracts like longevity. Not so much on the weeklies, but if you're able to build a portfolio that can, clear. In fact, well, you need to understand. Like the type of market, the instruments that they are, and the kind of markets that you're in, and the purpose for them. And I didn't see that before. So, like futures, you're in a game of hedging pretty much. It's like this is like insurance. Like it's fast money. You're there to suck liquidity out. Same thing. Options are insurance. They're insurance contracts. They're insuring a stock. That's what they're founded to do. And they're a derivative from the underlying. And you want to sell them for premium. Yeah, you can exercise them. But you want to suck that money out. So instead of buying a share of Apple for $100 and it cost you, hypothetically, I have $100, a share of Apple costs $100, and there's like I don't know, 500 billion shares. You're not going to make shit. Share price moves up. It moves $200. I mean, if even moves $5, you're making like 4.3, and then it's, you'd rather, all right, well, let's go ahead and get maybe a bunch of contracts for $5, and that's times 100 shares. And if it moves, I can make the premium, sell that, and now I have a lot more liquidity to go and buy more shares than one. And then if you're owning or you have the stock and the stock goes down, well, you can buy puts against it, to have you break even. Don't get me started on going and actually borrowing shares and lending and all that stuff. But, like you have to understand the type of markets and not just have one bucket of money all in futures. It's like, all right, well, hey, I have this. I need to take these profits, and it needs to move out to, longer investments, or right now the rates are still high and they're going lower, but I can still get a yield at 4%. It's all about that. So if you have futures and options, you got to think that's fast money. So if you're driving, like your investment portfolio for long term, like an IRA, 401k, and all that stuff, if you want to even get there, that's like 5-10 years. And that's okay. That's my minivan. I mean, there's risk in everything. You can you can have an accident. You can drive a minivan and still get killed, because some bozo's drinking and driving, and it just happens. You're taking a risk, but you have to think about that is, all right, well, now let's look at the motorcycle, right? So a minivan's not going to get to A to B, okay, so I'm not going to get to where I want in 10 years, and I won't have that kind of cash to reinvest in inflation, all that stuff. So why don't I use the motorcycle that gets me to A to B like quickly, like within minutes, right? But what comes with more speed and velocity, what the risks are a lot higher. So you're a lot more prone to getting accident with a motorcycle than you are with minivan. So you have to motorcycle. You have to stop quicker. You have to, you know, um, you know what I mean. So you have to think about that, like with futures and options and stuff like that. As opposed to, all right, I'm sending this money out to go into maybe a bonds portfolio, commodities, or investment long term, or then you have longevity options that you can go um, target out for a year. In fact, did I ever show you that portfolio? Let me see. Um, I just want to show you the power. This is a portfolio that I managed over with Dave for a while, and we did it under T3. I just want to show you the power of it. Yeah, it's going to blow your mind. I wish it was all my portfolio alone. It wasn't. I mean, if I had $1.9 million to myself, oh my gosh. Now I have to pay tax on it. But um, where is it? I love this one. Why? Because it was this was when Schwab was around before, or yeah, Schwab Street Mart before Street Smart before they took TD. So if anybody's ever operated on Schwab previous to that, you'll know what Street Smart is and you'll like it. I pulled it up.
Here, Daddy. I got your headphones.
Oh, well, thank you, sweetheart.
You're welcome. Here you go.
Okay, thank you. Well, you can keep them for now.
All right, then.
Here, give me a kiss. Mwah.
Yeah, how about we go watch the sky?
Oh, well, we can do that soon. Daddy's on a call with a friend, okay?
Okay, are you going to talk to them for real?
Yeah, well, I got to show him, Daddy's work, what he does.
Yeah, can I tell him hi?
You can say hi, yeah.
Yay. Okay. I love you, Daddy.
I love you too. All right, can you see that?
What?
Let's see if I can move in. So, no, this is the screenshot of what we had, our portfolio. Now, this was back in, yeah, we opened to most of those positions. They were a year out, and they had it. We still even had expirations all the way up to 23, but we didn't hold them that long. We ended up closing it. Why did we close it? Because of QT, QE. Because the whole purpose of this portfolio, and the reason why I have this is like they switched it over, like the TD Ameritrade now and all that. And this was also Schwab Street Smart, and it was under T3, and Dave was running it with Lighthouse. So these are all options. And these leaps that, at the time, I think it was back 2019, 2020, were a year to 3 years out. Yep. So, because we had apples then. Yeah, you could see, we had some losses too. The stuff that was mainly concerning to us was, on the legs, and that's what we call it. It's like we'd have a leg, so like an Amazon leg. Where's my overall profit on that leg? So I know we ended up cutting Amazon a lot closer as we had concerns about we were down 61K. Even though we're up, on the other legs, which is great to double that, it's still, we were going to get close to break even. We didn't like that. And, so some of these guys, they're easier to manage, but, they just, when you're starting to see losses like that, you want to start trimming and shaving. But, you would never even have the money to get there without, riding the motorcycle and to get that fast money to to then roll in and do what you got to do. So I don't think Dave would mind if I share that, honestly. I don't want to get, you know what, I better, I'll stop. I mean, that was a lot of work. That's where I made a lot of money. You know, and I've been chasing that ever since.
You can keep them for now.
Okay. Thank you, sweetie.
You're welcome.
But I mean, that ultimately was, you know, it was for a fund, but it took nice commission off it, man. I put a lot of work in it. You know, it took like what, 326,000. Then I paid tax, and I don't worry about after tax. It was like 274 or something like that because of some of the commission fees. And I was like, oh, I'll just go buy a house. So I'll go get a house built. You know, so, but I mean, money was easy then. Um, it's not so easy now with rates. And what do you mean? I take commission only. So, you know, like that's one thing I hate about like gurus and all these scammers are like, oh, I know how to trade stocks, and you don't even have a Series 7 or a 63. You never went. You don't need all that. But as a market participant, like you don't even understand the basics of you know, valuations of a company or understanding, you know, that like tier one economics. Like, okay, do you even have any experience whatsoever? Like, no, like these people will just go on to like pay me $200 a month and they don't even know what they're talking about. And yeah, some of them might get lucky once, you know, like, yeah. I mean, back in like 2018, I would play American Airlines. I would do pretty good on that. And, you know, that's before I was doing stuff professionally for people. And that was easy money. I mean, oh my gosh, you know, these things are 3 cents. And then, you know, some good news comes out. But like layoffs really isn't good news, but you know, that's less expenses for the company. And the only thing these guys care about is balance sheet. So the stock price is going to increase. And it's like, oh wow, I made like 7 grand, and you know, like you're going to hit that sometimes, but it doesn't mean you know what you're talking about. And then people are going to follow you. Um, and that's one thing I started to learn. I was like, I really need to. My problem, like you, I got hooked on this, and I think the worst thing was I made money in the beginning. I made a lot of money in the beginning, and it really screwed with my head because then you start chasing that, you want it back, and um, yeah, if you, I mean, it's pretty easy. You got, you know, when you're in stuff like that, it's you know just risk management. So you know that I can't lose more than this a day, and I need to make this a day, which is double versus the loss. So I'd be like, I can only lose a third of the cash I have on for this week or this day. I can only lose a third, and I have to stop. I don't care if it's 2 seconds. If I'm down, I'm out. And but then I know on average with the stuff that I'm in, because I've done like 6 months of research into it, and that's where you know stuff like micros and these indices and these indexes are a lot easier because they just carry the top market caps, you know. So you know you already have a lot of just I mean you have the the best of the best and the beast movers moving the indices, you know, like the Magnificent Seven. We're Mag 6 now because Tesla's having trouble. Um, so I mean that's where it's easier, but you know it's just like hey I have to I know that, with this, I can make up to 200%. And when I'm up 100%, like for me, if I'm up 70%, that's great. I'm taking at least 30. But I don't even like to think of it like that. It's just like, okay, well, if I'm down, yeah, you got to let your winners ride though, and that's when you layer. So yeah, well, you can also handicap yourself with quote risk management. I've done this too, where it's like, oh gosh, I'm up. That's great. I'm up $2 or $3. On a contract. I don't mean to talk you up while you're trading, but um, because you can't just. I mean, if you see some like if PMI comes in, like jobs, if you take a look at the you know in theory, by the way, because I talked to Mike Kantrowitz the other day um, on that. The S&P and the indices can just continue to go higher as long as we have soft data and inflation is low. Um, but even then, like um, we can see some chop because of we looked at the wages. So when that job on the payrolls that came out, it's like, all right, well that's good. It's not at the expected. I think it was soft, yeah, but the wages were like, oh, and that's where someone who didn't put in enough work or isn't seasoned enough, you know, realizes, uh-oh, why is it going down? Why is it going down? Well, you have to pay attention to everything, all the components of it. So, obviously higher wages. Um, but the thing is, like if you get caught in that, well, first you have to be prepared for that. And two, I mean, if you get caught in that mess and you don't know if you're oblivious for any sort, you just see it down. That's where it's like, forget my news, forget everything I've done. Right now, I see that we are down 20% maximum. That's the line I have to be out. I'm not going to sit there for 5 minutes and stare at it to make it get better and be like, oh, I'll go up. Nope, out. Cut it, gone. Uh, what? Oh, look, it is going up, but it's not at. It's not within. It's not meeting the differences in the valuations that you have and the knowledge that you have, the information. So at that point, you're lost and you're just in the ocean. You don't know what the heck's going on. Like I'd rather just stop. I want to know exactly what I'm in and my limits and my price targets. Um, and and that's where you can be like, all right, well, I'm going to hit it again once it hit this level because I knew like ARK was in it because I saw on the 10K or the 10Q that they bought, X amount uh, or some kind of filing. And it still has the potential to go up to this. Um, and that's when I'm like, okay, well, now I can deploy the cash I have for the week back in it. And now, great, I'm up 50 to 100%. And that's where Ray Dalio, when he talked about this, because Sam used to beat this into my head when I was working with him, um, in the morning calls. He was like, you have to listen. I mean, he's done TS and Goldman for a minute. He's worked with them for a long time. He was like, you have to understand that, on those trade desks that, you know, I don't want to get too far off topic, but you have to understand your limits. So all that goes out the window, and that it's all about percentage. And So, all right, cool. Now, yeah, that's where Ray Dalio talked about, hey, and he did. He said this. If you're down 50%, it takes 100% to make it back.
Please.
Because you think about that, you lost 50%. Now you got to make that back, and then to make profit, you know what I mean. So, um, it's quite important to always follow that rule, and it really is that simple. And then there's some days like last week when the clowns over at SMCI were selling to buy new cars. Who was it? The director. And I got into that and I got smashed because no one could win because I was moving. The tick was on a nanosecond, like, by $6 difference. I'm like, gosh, I'm getting nailed. Someday that's when you just you don't need to be in the market. Come back and I'd rather stop. And you know what? I didn't lose all my money chasing this thing. But that's trading, that's the way I trade is different from yours. Everybody trades differently. The way Zeter trades, we could all try to follow each other and do something, but there's always going to be something distinct about our styles, and no one's going to be exactly the same. Um, so
Hello.
yeah, but we should all have the rule of risk management and not being stupid because holding a bag through something that's a bad. I mean, come on, you don't who the hell lets their portfolio or even their account for that week go under 50%? You're just out of your mind. You're just better off not trading. Yeah, that's why 90% fell. Uh, it'd be cool. Yeah, it'd be cool if we can get him in. I want to see if Zeter would ever like to stream. See what he has to offer. Oh, that'd be so cool to have him on. Yeah. Let me see where are you at right now? Are you still? Let's see where your P&L's at. Just scalp it. Well, we got Asia. Well, he has to be careful. You know how much? I mean, I'm not going to even say his title on here, but he's obviously. You have to be real careful. Um, like you have a button pusher like me. Like I even had to be just careful disclosing that portfolio, even though it's expired. You know, uh, Compliance is actually you could get sued for anything these days. Mm-hmm. But when you're an advisor, uh, yeah. Well, it's that's something I would talk to him about terms and agreements and compliance. It's quite a serious thing, especially in this industry. Uh, Very serious, actually. I mean, you got like Michael Guyad, like with Lead Lag Report, and all he does is follow the spreads. Uh, and he can. He's a CFA. He can do all that. But he has it set up where he has a legal team where he's in his bounds to do that. But and so, it depends on your clientele, who you're working with, what your compliance is. Um, which it's different from an NDA or something. But excuse me, it's different from. Well, no, there's those two, even though they're not valid after you leave a company. Or I forgot what the disclosures agreements or something. But if you're actively, it can be a tricky world. All right, I'm taking a look at what you have here. Honestly, you probably are better off just shutting your mouth, unless depending on what you're representing or who. Um, I understand why John would have reservations, and I got to be careful what I'm doing. You know. All right, $16. What's going on here, man? You just Nasdaq is in the highs, dude. It is in the highs. I'll give it that. Because you have to understand what's going to drive this, right? Nvidia. Yep. Well, that's an easy answer. What weights the Nasdaq? It's those guys. But then Microsoft, you know, who who's been Nvidia one of Nvidia's largest clients, Microsoft. So with the AI stuff. So the sector obviously it's tech, or it better put AI. And yes, there's an absolute correlation. Like you look at Lam Research, makes the equipment for the chips. So whenever Nvidia has a huge sell, and then you go look at a balance sheet, and then see who's going to buy what, and their EPS and their guidance. Well, that's going to translate directly into LRCX, because Nvidia is going to need some more equipment to make that. And the same thing works with pharmaceuticals. Like for instance, back in the day when, like, a lot of people don't understand Pfizer, it's kind of capped and doesn't move too much, but they had a massive merger with BioNTech, and BioNTech is their mover. So it's like the European version of Pfizer, basically the same thing. But Borla would cap the stock at Pfizer, but then he would move BioNTech.
Dad, is it okay if I borrow a charger?
Let me see. Do you have one?
I do, but it's too short.
Okay. Here, go find it for me, okay? And you can use it. Just bring it to me so I can see it.
Okay.
It should be in the bedroom over there. So, like, okay, well, we had like phase 1, phase 2 was something that was coming out. Novo Nordisk was another one, with Ozempic, and Eli Lilly with Mounjaro. Well, what are they going to need in those labs? There's one key component they're going to need, right? Yeah, you can use that, baby.
Oh, okay. Is it okay if I use a longer one?
Nope, you got to use that one, okay?
Aww.
I know. Go ahead. So, Thermo Fisher roller bottles. Everyone's like, "Oh, Thermo Fisher, they just make workout running models, right?" Nope. It's a lot more to that company than you realize. Thermo Fisher. They make TMO is the ticker, and they make the roller bottles for Novo, Pfizer, all these guys, Eli Lilly, and so whatever's going to happen as far as like when they're doing like DMD and the hemophilia research, they're using a ton of those. Um, so you would see a lot of buying that would happen into Thermo Fisher. When you see, all right, Novo Nordisk is buying X amount of bottles from Thermo Fisher. That's their product, and how much revenue is going to be created from that? Oh, like $336 million. Why? Because they have to. I mean, it's basic business, dude. You know, uh, when does it show up in the market, and how does it correlate? Uh, like ASML and Broadcom were another big one. You saw those rip. Uh, they move with Nvidia, uh, and I'm not touching it yet. I did it back in that was the one that I was one of the first ones in it. Long before I met you, I was one of the first ones on the retail side to call it out. Uh, and I was all excited about it. I don't want to get into too much detail, but there was an event that DoD had, and I still have to be careful speaking about this one. But there was an event with contact tracing DoD had, and I found out about it. There was public information about it, but Palantir was one of the ones that were going to be on the contract. And there's a lot of money coming towards it. Peter Thiel, Alex Karp, at that time had a lot of big stuff moving in. And from what I knew with the deal going on with DoD, I was like, wow, this contact tracing stuff that's going on, and they're even having Elon Musk and Bezos come into a certain base to test something out. Because I was on the tech side of things. I was like, this is big, and they're like they were one of the ones that was going to be selected. So I got on there. It's like, hey, it was like $5 or $6. I was like, Palantir is going to go to 11. If you want, I can go find that. I think I still have it somewhere. And then we all started buying that, and I remember it. That's when it went to $21, and then Citron, it was 19 or 21, right around there. And Citron released a report. It was like, this is a circus, quote. That was a report. It's probably still on CNBC somewhere. Palantir is a circus. There's, and what he was doing was he bought X amount of shares, and he was, being the dirty person that he is at Citron, releasing a hit and a short report on it. Let me see if I can still find that. It rings a bell. Let's see. Yeah. Well, that's against. I mean, that's illegal. That's pump and dump. um, and you have the SEC. Like you can't say you bought something and then tell someone, like, not tell somebody you sold. Like, you have to disclose. Yeah, I mean, he's been transparent. Ronan Kitty's playing a game. The SEC doesn't like him because their question is, okay, so he's not verbally doing it, but he was using meat. They're really upset about they think they think there might be grounds to him manipulating the stock, you know, with even the memes. Um, I know he has a legal team with him. He's like right on the line with what he's doing. Uh, oh, the HTML. Yeah, the HTML. Yeah, because he was threatening Morgan Stanley or something. Which is funny. I have Morgan Stanley because I have an account with them. I have a bank account with them, and then also use E-Trade. Uh, but because I have like 8 brokers, but the thing is, uh, yeah, that's what he was doing. Yeah, Zyder's right. The what's the other thing you could do that can get you in a lot of trouble? Oh, there is a loophole, and Zyder might know about this. And a lot of these politicians play it. Uh, a lot of companies will play it. It's technically the insider the insider sells. There is a there's the term insider insider selling, which is illegal, but then there's like insider activity, which is okay because they do report it to the SEC, but they have X amount of days to file it, right? So Pelosi will play that game. You'll never know. You'll never know when exactly she like if she buys today, you'll never know she did. She sold today, never know she did. It will come out like 30 days later, and then like I'll have to check the FRED. I forgot what it was, the FRED Act or something with Obama, uh, the Disclosure Act. But there's a loophole in it, and basically, like if I think it was like 30 days or 50, I can't. I'll have to go check again to make sure I'm right on my legalities here. But they have X amount of days they have to file, and then some won't. They'll actually go like 20 days over and just pay a little fee, pay a fine, and get a slap on the wrist for it. So, and you got to think, like these people are getting in on stuff that moves like $20 a day. So, oh yeah, easily. Um, and I loved how the SEC had the interview with Kramer, and Kramer asked him, he's like, "What about Congress?" And Gary just beat around the bush. He was like, "Oh well, we investigated them in the past historically," but then just really beat around the bush about that, which is it's absolutely garbage. And the other thing, I knew a guy, and this applies to exactly what you're doing here, that worked with a gentleman that started the electronic stuff. He was a developer. I think his name was. Well, Martin told me about him, and Sam told me about this. He had a really strange name. He was with Whole Trading. Yeah, it was Chaim Bodek, and he was talking about how it's completely legal to do this. You have these billion-dollar computers that are automated trading systems um, that will trade on the nanosecond, and that's where I try to find my edge here with the premiums, and that's what we do. But the thing is, what he was talking about, how were these, especially with EVTs or electronic volatility trading, um, these orders, you might be first in line to get filled, and somebody was behind you, but then they would quote teleport in front of you and front load the order and then dump you. Uh, and this is on a Wall Street level. This is, and how it was unfair. Uh, and that's still going on. And it's funny, if you look into it, and if you even try to find a YouTube video on any of this stuff now, like you won't find anything on it since like 10 years ago. It's almost like it's been scrubbed off the internet. But it's definitely not a fair game. That's for sure. And yeah, you can get in a lot of trouble, and you have to be careful with what you're doing here. And that's why I'm kind of touchy with the wage cage and things of that nature. Is you can get in a lot of serious trouble. Uh, just go to sec.gov, read through FINRA, Financial Regulation Authority. Um, know your left and right limits. Be careful. Be honest. Disclose everything. Yeah, Tony, Sam, futures. Yeah, I mean, there's a team over there because I mainly deal with options, but uh, there's a team over there in New Jersey that they're on larger clientele. Morgan Stanley, even. Um, I mean, Tony did work up in New York for the longest time, but that stuff, once again, it was like automated. They had an algorithm that would run this stuff, and it was basically like an AI that would, uh, you know, it was there to provide liquidity, I suppose. Um, but it was, a part of a larger fund. So if you have a client that has 1.2 million, you know, they would put most of that in a safe area, like safe products, safe securities that have no risk to them, and then they would have a tolerance of risk, and then futures were one of them. But also they would delve into commodities. So unlike what you're doing here on uh, maybe Ninja, which I don't even think they allow hedgers, um, the real guys like the commodity trade, like what Dr. Anas does, down in Texas with OPEC and the firms through New Jersey, they're actually hedging their real commodities. So they have X amount of barrels that goes into a yard, and they'll trade the futures, and then sometimes it's a exercised or delivery date. They might take payment in oil barrels. Um, and if you look into oil futures, that actually gives a lot of clarity into these type of derivatives on the underlying. Um, the other thing is, like, I mean, you look at like where futures came from. It was like the farmer. He goes to the market. He's like, all right, well, I'm putting a bet that we're going to yield this much many crops. At the end of the year. We need the cash up front. Um, I mean, that's that whole thing, and you'll find a lot of more professional, like firms professionally doing futures trades when it comes to actual commodities or underlyings that they hold. And then of course you have firms that specialize in high frequency based off the note itself, or like even this, it's all electronic. So this isn't like 1970 or 90 anymore, early 2000s. And if you look into Mr. Bodek's work, it's quite interesting because he was one of the ones that he was a developer that did all the code that revolutionized it to get it off the floor into, the screen that you have today. Because I think he worked for Whole Trading. Renaissance is another big one. They never lose, ever. Uh, but they take like 60% commission fees. And you better have like 100 million to even be a client with them, or like be eligible for some kind of ISDA. So like I'll never have that in my dreams.
Did you open this?
But they exist,
Yeah. I love you, Dad.
I love you too.
Hello, whoever that is. Who are you talking to on the phone? What's his name?
That's Pedro.
Hi, Pedro.
Yeah.
Hi, Pedro. Why isn't he answering though? Does he love me?
Everybody loves you, Chloe. You're awesome. Yeah.
Well, how does he?
Yeah. It'll be fun. I'm gonna see if I can take her to. I took her to the theme park the other day. We were driving go-karts around, and
Yay, the theme park!
yeah, and then we did.
And Frankie's a theme park?
Yeah,
Wow.
and Disney World. Might go back down there. I hate the prices in Orlando. Frugal. Yeah. Yeah, I stayed at outside of SeaWorld, there's the Hilton there.
But yeah, and the number we were in was 26.
Yeah, that's right. No, last time I went down there, oh my gosh, dude, it's like cruise ship prices. I'm like, what? Just get off the prices. Just roll off the shore into the Central Florida. Come on, yeah. I mean, come on. Breakfast is like $40. A continental breakfast at Hilton. I mean,
I'm so you think that.
yeah, insane. It's unbelievable. I mean, I was at the Antonio Catalan. Uh, yeah, this past week. Yeah, that's where I was sharing the drinks with you guys. What? Were you there? When I was like, yeah, it's a nice place on the rooftop bar there. Uh, that was past week. Yeah, because we made all that money off Nvidia, so I was just blowing. Yeah, pull out the broker card. I don't even have credit cards. I have an Amex, but like I got a nice metal card and I just swipe it everywhere. Oh yes, yeah. Yeah. No, I didn't get that one. I don't mess with. That's a trap, dude. Yeah, I'm like I can get one. I have a broker card, especially with Tundra, and it's like beautiful. It's off white. It has it's titanium, and like that's enough. That's enough to impress the waitress. You know, uh, but like I don't do that, man. I'm like, all right, well, cool. I make these X amount of trades. That's why I have like the Robinhood debit card because it's just so easy. So I just throw like $1,000 in a Robinhood account because I don't trade professionally on a Robinhood account. But when you see a big move on Nvidia, like, all right, I'll buy calls on this account too while I'm trading my E Trade or my Fidelity Active. I'm like, all right, well, cool. That's an extra. There's a steak dinner. There's and then
Order submitted.
I love that, and I love how it settles. I do love the Robinhood Cash Card because I'm never touching my bank accounts. And yes, the debit card. Oh my God, it's awesome. You can't design the Robinhood debit card. It just comes in. It's like green and black. I saw your Cash App. Let me see. I'm looking. Hold on. Oh, somebody said meow, by the way. No, I can't see it. I can see you, but don't show your numbers. I don't want to see you. Okay. I can't see the card. Here, hold it up because I can't. Yeah, I can't see it. I don't know. Oh, that's cool. I don't even have my wallet with me. I would just take my metal card out and you hear it go ding ding. But no, like the Robinhood, like screw Cash App, dude. But one thing I do like about the Fidelity has one too. If you get debit cards on some of these brokers, but I just don't. Yeah, yeah. But I purposely keep myself away because that's where a lot of my liquidity's at. So I don't like to have any spending account to it uh, to protect myself. But I do have a Morgan Stanley card to a separate account, and then I have the Robinhood card. But I love the Robinhood card because when I'm doing the trades on the big portfolios, I can take $1,000 for a week or something, or like 10 grand, put that in Robinhood, make an extra, I don't know, $2,000 or something, and be like, all right, well, that's never touching my bank accounts. Um, Although it does show up on taxes. That's why I don't like to do more than honestly 5. Sometimes I'll do 10, but I'll do like anywhere like from 1,000 to 5 on Robinhood. Trade those options, make that, because once you have to submit the 1099s, it's not too fun, especially when you're spending out of the brokerage like that. So I try to keep it under 10. But everybody else is out getting credit cards and loans and all that stuff. And I'm like, technically you could, if you want to be a real degenerate and you want to get a loan without interest, and the only thing you have to worry about is margin calls, just get margin. But I would never, you know, yeah. But I mean, that's your cheat right there, little on your phone while you're on your computer with your big brokerages. Just cha-ching, there's some fast money. Yeah, I do that every day. Yeah, yeah, it's all fun and games until tax comes around. But and then you always have that one bad week where it just takes it back. And you're like, yep, we're not making any money this week. No, but for the most part, you can easily walk away with. You could probably clear like 2 to 5 grand on a good month, um, if you scalp correctly and can really have the willpower to manage your risk. Um, but a guy like me would just take 4K and move that into like an account so I can go buy a CD or something. Um, yeah, and then I have like 1,000 for spending money so I can go get a hotel and or go to Vegas or whatever. And then there's some months where it's just like, man, the market's not going to give it to me. Um, and that's the problem with that, getting comfortable with that lifestyle. So yeah, it's like the hardest way to make easy money. And then my problem is sometimes if I'm doing work for somebody, I have to report all of my trades to include that too. So it's like, all right, well, here's my 1099s across the board. Here's okay, here's my trade history for the week, and it, it's like that's not fun either. But um, who's a car?
Oh, excuse me, Dad. I wanted to like my old now. So I want that one, and I don't know how to get it.
Hang on.
Because
Yeah, the land holding company. Yeah, I know about them. I've done. I did do a report on them a long time ago, but it's been like months since we touched that. Why? Because of uh, REITs. Like at least on our side, our main focus is tech, AI, and you know pharma right now. And we pay attention like to oil and stuff, and I think that's where PTL actually has a lot of power there, especially if Biden keeps draining the SPR, and 'cause last I checked, they have a lot of there's a lot of oil,
Okay, I need
domestic.
this.
I don't know who's doing it, if it's Exxon or Hess or somebody, but
It's almost there. Don't worry. 3, 2, 1. There. Now you
it's
see.
too far out. That's like 20 years. I mean, come on, that's no one cares about that stuff yet. It's probably prominent, but that's like the market prices stuff in, you know, when it's ready, or it will preemptively price it in, and then when we get there, it's it just goes. What's that?
Wait,
You'd have to see buyers move in. Here, hold on, sweetie, what are you doing?
I need to lick my wounds to heal 50% over 5 cents.
Okay, can you do that?
Uh,
I don't know how. Maybe you can. Here, go ask. Let's see if she can help. Okay.
um, mhm.
Okay, Daddy's got to finish this. Okay. All right.
But Lizzie,
Okay. All
let's
right.
not get it all right.
Well, we'll try. Okay. Sorry about that. Um. So hydrogen. I like. If anything, it's a lot of retail buyers, and there's some people that are putting money into it, but it's not the sector that anybody cares about or is hot. I mean, if you look at look at cannabis, dude. Like back then, like the Canadian cannabis stocks. Like the market got really excited about them, and they priced it all in and whatnot. And then you realize, okay, well, the FDA is not going to approve and all that stuff in the U.S. And Tilray and all this crap, and then what they priced in on the market was everybody be smoking like 5 joints a day, and then all blew up or something, and it never got there, and also a lot of with the red tape and things, this stuff is 5 to 10 years behind. Same thing with chips like Intel or anything like that, or some of these like Taiwan Semiconductor was, they're like, oh, we got to get out of Taiwan and we got to get out of like a lot of these chip manufacturers, like, well, we got to get out of China's grasp. They're 5 to 10 years behind on infrastructure. It will take at least 5 years. So we're not going to see that price action. Um, that's the thing. Or the market could price something in, but it's not going to stick. You know, depending on, okay, where's the real revenue? And hydrogen. I mean, like people might invest in the idea and think like, oh, I'm going to hold this for 10, 20 years, but a lot of people seem to make the mistake of it's a new technology. It's oh, this is 3D printing or something. I'm going to buy it right now, and it's not where it needs to go. The infrastructure is not there. The revenue is not showing up. Once again, it's all about revenue. It's all about the market cap. Like that's value in the market cap. Those are two very large components, and you're in the business of owning a company, even if it's like 0.0001% of it. And when you own that share, you're dealing with accounts receivable, you're dealing with revenue, you're dealing with all the components to deal with the company's debt. You're not buying into. I mean, you're buying into actively what it's going through right now. Not that's great. Maybe we'll see it 20 years, maybe sooner. But right now, like with energy, obviously First Solar and Enphase, some of this stuff was rather hot recently. First Solar could go to the 290s, 300s. Um, Now I think this ESG crap is not going to stick either, but there's a lot of buying into it. Um, and then oil is one of those more classical. You know, oil's been around forever, obviously, but that's where you can look into. All right, well, are we gonna keep the pipelines closed in the U.S.? Uh, the SPR, the main the main component of oil right now is OPEC and those cuts. So are they going to continue voluntary cuts? And that obviously shows up at the gas pump. Like everybody's like, oh my gosh, why is it so high? Well, actually, you can predict where gasoline's going to be if you look at the price of the NYMEX. You know, and that's pricing it in. You look at the futures, the oil futures. Um, but like elections, of course, they're they're draining the SPR and stuff like that. But if we have a new administration come in and they start opening up pipelines again, and they don't all just yeah, I we could see some interesting things happen. That's where I think PTL um, is prominent as far as, because last I checked, it's not one of those holdings where it's exposed to uh, one of these real estate trusts that are.
Daddy, I need it back.
Sweetie, I'm on the phone right now. Okay.
I'll take one myself.
You can go ahead. Yes.
Yeah.
So I mean, it's more about, okay, well, the land that it holds, and the value that's on the land, and who's going to buy from it. Because if you're like commercial real estate holding, that's actually in the tank. I mean, if you were the person who owned the AT&T building, and you look what happened to that, it's like a 90% loss, um, in building value, and that's insane. And then you look at real estate that's solely dependent on inventory, like housing, um, which is its own debacle in its own, which went 200%, and you had all these boomer house flippers and Airbnb clowns, trying to become landlords, leveraged to the chest, and 10 Airbnbs or something, and now the inventory is clearing up because lumber's down, and inventory is getting higher now. Um, where PTL is a little different, and I think it holds more value into energy and mineral rights, which can, depending on the energy trade, I think might have a huge impact on its value. Uh, but for the most part, we haven't messed with any real estate or land trusts in the last 2 years. No, the last year, as soon as rates went up, that was a no go. And a lot of these idiots, excuse my language, I guess I wouldn't call them idiots, but were probably sold something dirty or misinformed, like Fundrise. That just buys into like rental properties and things like that on ARMs, and was doing it in Canada when everybody was getting a 60% adjustable rate mortgage, which is insane. Uh, just because they couldn't get off their high of, I got a house or a property at 274 brand new, and now I can sell it for 400,000 and then rent it out and then charge people, like a leech, like that's the stuff we try to get out of and veer away from. And then that just kind of took us out completely from anything from land equity or anything like that, because we see it as inventory goes up, where you can see a slash in that. I don't care about the rates. The rates are most important, but they say, oh, the rates are going lower. I mean, that's still uh, the rates are the most important component there, because higher rates, no one wants to pay, but as far as this new argument coming out, well, the rates are going lower, that means it's going to be better, right? No, not exactly, because you could see you can still see a major drop in equity, and it's not healthy. what usually would take 20 years to see that increase in equity, happened in a matter of 2 years, thanks to QE, and it's just inflation needs to hit 2%, and until we hit that landing, it's not safe for equities, at least on our analysis and what we're seeing over here. And I'm no real estate expert, but we usually pay attention into the macroeconomical aspect of that. But yeah, PTL I think is in a different boat. As far as the energy trade and what they have to offer, and what revenues that they'll pick from domestic energy. Like to learn a little bit more about it. Be interesting to revisit it. Yeah, I have to go get the little one in the bed, and I have to be up into the office tomorrow. Yeah. Well, I'd love to see what the Asian markets do. Obviously, how much they hold in our treasuries. And I think, well, I was on a call with Dave Vermillion and Kantrowitz the other day, and those guys are, extraordinaire. They've been in this game for 30 years as economists, and one thing they do find scary is the yields, not just the yields, but if you look at the spread. So if you can even Google it, like the OAS, I can share that with you. Let's see. And I think it was on a 10-year, because a 10-year is the most important of them all. That's what drives your mortgage rates. That's what drives your car note. That's what drives the lending. The 10 years it. So I've said this multiple times. The 10 years trading at what, like 4%. That's going to put 3 points up on a mortgage because of spread. So it's going to be 3 points to set in a mortgage, but you can instantly price that in at 7.17. And one thing I love about bankers and realtors, they tell you, oh, we don't know what the rates. They always change. It's just bull crap. It's like I know how to beat you at your game. I've worked in the markets for a long time. I know exactly what you do. You price the rates in on the spread, and look at that. We actually had a bump in rates. They're at 4.4, so that might put the mortgage rates at 7.17. But let's find the FRED, not just the TNX. Oh boy. Yeah, it's an option adjusted spread, and you should be able to find it on the ICE futures. We have to find a 10-year. That's what that's the main focus. OAS 10-year. Oh, let me see. Yes, it is hilarious. And exactly it is. They always forecast like 1 to 2 forward. It's crazy. I wonder what he thinks about, Powell. He's like, oh, we're just waiting for the data. That's I saw the other day, like, one of these real estate gurus or something talking about, well, what do you think the rates will be at next year? Like it's, come on. 10-year. Oof. Oh boy, this is lovely. Hold on. Oh, you're gonna like this. Let me pull this up. Then it's going Yahoo Finance or the. Well, let's look at the BOF U.S. High Yield Index, OAS. Right here. You see the ICE. Look at that. See if I can zoom in. I still love. Oops. Well, there's that extreme peak that we had, obviously, during 2020 on the spreads. But I think one concern that we have is paying attention to the OAS, the spreads, especially, 23 was one thing, but, from January 23 until now, we've definitely been seeing some of the action start to happen. But I'm going to go over to the SIBO 10-year on Yahoo Finance. And one day. When did this happen? On June 7th. Now this is on close, but yeah, you saw that increase. Yeah, because the payrolls, because that's where you saw that spike, right? But this is very important because it also affects the stock market. Right now, what you're looking at with the NASDAQ, that's very important too. Because, in theory, rates up, equities down. And the problem is the Fed and monetary policy. And, it keeps wishy-washy. And, the market always tries to price in, all right, well, rates going to be lower. Why? Because of roller companies. They can take rollover debt. But I digress. I'll get off the yeah. Let's watch NVIDIA. We got to pay attention to what Japan has to offer because they're the largest foreign holder in our 10-year treasuries. So when they do that yen intervention, that always sends ripples through the market, and that can directly affect. And like one thing that Cedar always talks about, he mentioned, was London. You always see that big sell around midnight. Yeah, I mean it trades overnight, but well, that's to meet. Well, that's because of the split. They have to meet. They have to meet the filing requirements of the Nasdaq. So once it meets its filing requirements post split, you're going to see the new share price pop up, and it should be tomorrow. And it'll probably be around the 200s, 2 or 300s if I'm right. I haven't been. I don't know. That's because Blue Ocean can't pay it out, the market maker. So that's telling you they can't. So your margin, yeah, at 20%. So they can only pay X amount too. Does that make sense? So you're not going to get your full value there. I mean, Robinhood's been through. Blue Ocean is one of the main deliverers for Robinhood, and obviously payment for order flow sold to Citadel still. But I mean, they've been doing that for a long time. So that's telling you, yep, Blue Ocean ATS, they accept trades in a range of 20% above or below today's game's reference price, right? Orders out of that range will be rejected. So they're not going to take anything over 20% or below. Okay? They can't afford to pay that out, or they don't want to. So that's what that's all about. All right. Well, I have to go get Miss Tiger to bed. But yeah, it's just I'm trying to show what I can. I know I might be a smooth brain, compared to some other people in here, but I just work in my line of work and what works for me. I didn't go to Yale or Wharton, but I'm just happy to be where I'm at. Um, I'm just really worried about this split coming up and what it's going to do with Nvidia. I think it could kill the stock as far as trading momentum, and that's going to affect Nasdaq. Well, you have to understand, like 1 for 10. Come on, man. It's not 2 for 3. So, if you're to buy a call option on Nvidia, what used to be like 5 points out of the money, like $5 out of the money. Now, 2 for 1, for something a split of that magnitude, that's going to weight that thing down so hard it's going to be equivalent to like a worst case scenario buying $50 out of the money would be equivalent to buying $5 out of the money, and that market maker is going to price it in still like it was $5 out of the money, and you're going to get ripped, and you're going to get the floor taken out from under you, and it's going to start moving like an Amazon or a Google, and that's going to affect the Nasdaq, and some of these hot shot trades you get might not be so liquid anymore, and it won't be so profitable either. The other one I want to pay attention to is Eli Lilly and ISRG and Intuitive Surgical, because they've been delving into AI. And then Lilly has some really good news that's been coming up. I can't disclose everything that I know about it, or I could get in a lot of trouble because some of that's not public yet. But the thing with Lilly is Mounjaro has been quite profitable, and then they're exploring some new avenues. But they were doing some work with Intuitive Surgical, because Intuitive Surgical is quite useful in the AI realm of medical. And Jensen Huang keeps talking about, AI is going to be so important in the medical field. What he's really catering to is, some of the capabilities, especially with ISRG. And one of them was where, a doctor could pull something up, and then they could like figure out what genome you are, in a matter of a second. Where, it's, it's just some cool things out there. And Eli Lilly was, playing into some of this stuff. So, that's another one I would pay attention to. Also, before I go, check into what's been added to the S&P 500 and what's been taken off, because Palantir was added. Yep. So just go look at the filings and see what they added and what they took off, because that's going to affect some things too. Like Pfizer, back in the day when we used to trade that when it was good, during the COVID race, that was when it was still on the Dow. And, that's when you could get it. Albert Bourla would always open up with something. They would do like an equity trade-off or something of that nature. And it would always close on the day at 29. It would open at 32, 35. And it was an easy $1,300 to $13,000 a day. But then it got removed off the Dow, and, they replaced it with Amgen. Amgen, that's right. And, ever since then, the stock's been capped. But you have to pay attention to when they remove the stuff off of, the indices, and how that's going to move the stocks themselves, and also how that will affect the Nasdaq, the Dow, the S&P as well. So just keep all this stuff in mind. Do your research. Don't just go into it blindly. This week's going to be interesting, and
Order submitted.
I think you're better off protecting your cash, sitting back, getting
Order
a
submitted.
real good feel of what's going to happen, and then when you see the action, getting in and getting out. See what tomorrow brings. Yeah, of course. All right. Well, good luck, and talk to you later. All right. Bye.
Can y'all hear me now? I might just go back to Twitch, to the Twitch platform and stream off of there because I can't get this to let's see. And oh my gosh, why? Okay, hold on, log in. I don't know what's wrong with this. Like, I seriously don't. But maybe it's just can y'all hear me? Anybody hear me? Testing. Let's see. Can y'all hear me now? Anybody? Can y'all hear me? Anyone? Maybe I'm just doing something wrong. Channels required to restart. Desktop. Can y'all hear me? Alright guys, well I'm going to get off of here now. I will see y'all tomorrow morning. I'll be on at 7 o'clock. So, yeah. I'll be on at 7 o'clock tomorrow morning, so I will see y'all then. I'm up. I'm only up 54 cents, but that's good. I'm still in the green. And that's only on my little small account. So, alright. I'll check y'all out tomorrow at 7, and then we'll see what